Quick trade recap. I took one trade today. It was the short on NQ. It was a win. It was pretty simple, like a very simple trade. Pretty straightforward for you. So yeah, let's get into it. So going into today, I was bearish biased. Now, why was I bearish going into the day? Well, if you remember, if you watched Tuesday's recap when I took that really nice long, I was actually bullish looking at this model on NQ, and I wanted this to be the draw on liquidity. Now, notice, has NQ taken out this high? No, we've just stacked equal highs up here. However, ES has taken out this high. In the overnight session, ES completes this beautiful internal buy model. Remember, ES had that internal SMT. So ES, we never ended up sweeping out that internal low inside of this imbalance that NQ did come back into. So this was the bullish SMT for this buy model. And then we had that internal sweep, internal manipulation, displacement higher, standard deviation 2 to 2.5 lines up with the drawn liquidity. Then ES gets the change in the state here, rebalances to the 1 hour here, and then starts buy side of the curve. And this internal market maker buy model on ES got complete last night right here, as you can see, 12 a.m. ES ends up sweeping out the high, and then we get clear and obvious heavy displacement lower. So at 12 a.m., we put in this bearish SMT with NQ. And then where's NQ at 12 a.m.? Right here. So we get yesterday morning. I didn't take a trade because the assets were extremely discorrelated, and I wanted to see a move higher on NQ. But very soon after market open, ES ended up like sweeping out these highs. Bearish SMT was put in. I just didn't like the way anything looked. And once again, they were not correlating well at all. Like they were moving in complete opposite directions for like half the morning. So yeah, I did not like the market yesterday. But what we ended up doing yesterday is having a heavy displacement move lower, and we end up running through this 12-hour bullish imbalance on NQ. So this bullish fair value gap right here gets inverted. So this becomes an inversion fair value gap telling us what? If we're delivering from buy side liquidity and we're selling off through bullish imbalances on the bigger time frame, what does that tell you? That tells you that the market is bearish and that the draw on liquidity is sell side. If we are displacing through bullish imbalances on the bigger time frame, delivering from buy side, the draw on liquidity is not buy side, it is some form of sell side. Because if it was buy side, we would hold the 12-hour fair value gap and it would send us higher. But since we displaced through the 12-hour, it tells us that we're not going here and the market wants some form of sell side. So yeah, pretty simple bias today, like I said. And then like the New York PM session through like midnight, what is the market doing? It's just chopping around inside of this. I guess this was more like the Asia session, but it was both. It was New York PM session and Asian session was just chopping around inside of this bearish 1 hour, and then at 12 a.m. we get this internal sweep, internal manipulation, market displaces lower, changing the state here, and notice this is just a simple IRL to ERL, and then vice versa. We're moving from external range liquidity, rebalancing to this fair value gap, which is internal range liquidity. This holds bearish, and then we get displacement lower again, targeting external range liquidity here. But before that, what does the market do? We get another rebalance to internal range here, targeting external, continuing displacing lower, and then at market open we had this low still intact here, clearly trading towards this. Order flow is very obviously and extremely bearish here. So I just want to see a continuation lower towards this. And then, like I said, we had this untapped, brother, what? Hang on. Okay, hang on. I don't know what's going on. Okay, I don't know what the heck that was. But at market open, we had, oh wait, I already did that. We had this untapped 1 hour, and I basically just wanted to see this hold bearish and then look to see continuation lower. Okay, I genuinely don't know what's going on right now, but fair. Bro. Okay, I'm not even gonna do the replay trading. You can just see what happens in hindsight, but it's not working right now. But yeah, I just wanted to see this hold bearish this 1 hour, and I wanted to see a continuation lower. Now at market open, the exact market open candle, what do we do at 8:30? We get a move higher, we get manipulation higher. Now this is exactly what you want to see if you're looking to short this. You don't want the market to open and then just immediately sell off and leave this high intact. You want to see internal manipulation. You want to see a stop raid in the opposite direction of where you're looking to target. Now when NQ gets this move higher, what else are we doing? We're not only sweeping out this internal high, but we're sweeping out this one here. And then we're entering this, we are mitigating this 1 minute bearish imbalance. This was also a 5-minute imbalance. And then once again, all of this is taking place inside of this bearish 1 hour. And then also look at this here. If we measure from this high to this low, we had also tapped equilibrium of the price leg at market open, as you can see. So this move right here taps equilibrium of the higher time frame price leg, and then the reaction of this is this 30-second inversion right here gets closed below, or obviously that's why it's an inversion, but that's where I ended up taking my short. On these accounts, I held all the way to the external low, but on these Tradified accounts, I took my position off at the internal low. But now, why can you target the external low? Because it's very obvious that this is the draw. Like if we're looking at this here, this sell model, what is the draw on liquidity? This low. But if we're looking at the internal sell model right here, what is the draw on liquidity here? Sell side. So we've got this, and also what is this right here? This is an obvious, beautiful internal market maker bot model. So we've got, this is such an obvious buy model, or sorry, I'm an idiot, sell model. This is an obvious market maker sell model. So what do we have here? We have buy side of the curve where we generate sell side liquidity, and then the market gets bought up into a key level. So what is that key level? The 1 hour fair value gap, and remember equilibrium of this price leg here. So if we take this high to this low, the market comes above equilibrium at market open with this 830 candle. So we tap equilibrium and the 1 hour fair value gap, which is the key level. And then what is the reaction? We get the inversion fair value gap, smart money reversal, triggering sell side of the curve, targeting sell side liquidity here, and then the external low, which is this low on the hourly chart right here. And yeah, that was today's trade. Once again, like I said, it's pretty simple. You don't need to overcomplicate your bias. Like I always say, like if you see that we're displacing through this bullish 12-hour on the bigger time frame, we got SMT at the highs. We're respecting a bearish imbalance here. We're respecting a bearish imbalance here, and then the market opens inside of this bearish 1 hour, and then the reaction of this 1 hour and equilibrium of the price leg is clear displacement lower with an inversion. Well, since a higher time frame order flow is obviously already extremely bearish, then you can expect to see a move towards internal sell side, and then your entry, and then the external low as well, and then your entry model itself can just be the inversion. So wait for manipulation, and then wait for the reaction of that manipulation. Your job is not to predict that the move is going to happen. Your job is to simply react to the move already happening. And then also, I forgot to mention, you definitely could have waited for this here if you wanted to take this entry on the rebalance to the 1 minute. However, this will not always happen. So oftentimes, like this wick won't be there, and the market will just completely dump straight towards the draw. But if you want to wait, if you wanted to wait for extra confirmation and you weren't confident enough in this initial move, then you could have waited for this rebalance. I was thinking about scaling here, but there's a consistency rule on these Tradify accounts, and I can't make more than a certain amount in 1 day. So there is no real point in scaling because this internal low was already the max amount of profit that I was able to make on a single day on these accounts. But yeah, once again, here are the executions. I think I showed them already. And then here are the executions for the top step ones. Like I said, I held these to the external low. And then yeah, what happens after the low gets taken? Like how do you know that you were right about the draw on liquidity? Because look at the reaction of the market taking that. We're now getting obvious displacement higher. Now, even though we're getting displacement higher, it's way too early to say that this will be the low, and then we're now going to see buy side of the curve on NQ towards these stacked highs. It's definitely too early to say that, but it is something to consider. But if we're going to see this move, like what we need to do is the market needs to displace through this entire bearish price leg. So this last move lower here on NQ, maybe there's like a bearish 4 hour or something. Oh, what the heck? Is that a 4 minute? No, 4 hours. Okay. Yeah, this right here. So this 4 hour, if this can get displaced through, then that tells us what? That this is the low. We've got another bullish SMT because ES has not swept out this low. Okay, I don't even want to know what that is. But yeah, if NQ can get above here and displace through this bearish 4 hour, then what does that tell you? That tells you the draw on liquidity is buy side. Because once again, if that were to happen, then we would be using the exact opposite logic that we used for the exact same logic, just flipped upside down that we used for this morning's bias. Like if this morning we were delivering from sell side with that bearish SMT running through the 12 hour. So let's, in case you forgot, there was this bullish 12-hour imbalance right here that the market obviously displaces through. And then we're respecting bearish imbalances here, respecting here, clearly heading towards sell side liquidity. Now that sell side's been taken, however, if the reaction of this low getting taken is the market getting heavy displacement higher through that 4 hour, which is this right here, hang on, low key. If the reaction of that is heavy displacement up through this bearish 4 hour, then what will be the new scenario? We will now be trading from sell side because we swept out sell side, inverting bearish imbalances on the bigger time frame, telling us what? That the drawn liquidity is some form of buy side. So if the 4 hour candle gets through this bearish imbalance, then what do you expect this to be? Buy side of the curve targeting all of these equal highs. And at that point in time, this bearish SMT on ES will be irrelevant because the SMT has already done its job. Okay, what the heck? Hang on. So this is currently a bearish SMT, obviously, because ES already took out these highs. However, if NQ does want to, I'm not saying this is going to happen, I have absolutely no idea, but if the market gets displacement through the 4 hour, and then tomorrow morning, say we're like somewhere up here, then what does that tell you? That the market is bullish towards buy side because we're delivering from sell side, running through bearish imbalances on the bigger time frame, telling us that the drawn liquidity is buy side. And once again, even though this is a bearish SMT, if that happens, if this move happens, then the job of this SMT was to deliver this low. Once this low is taken, notice ES has not taken this low, NQ has. So once this low is taken, if we then get that displacement move higher, then this SMT is no longer relevant, this bearish SMT right here. So yeah, just figured I'd throw that out there right there. So I'm just trying to explain, like, once again, you don't have to overcomplicate your draw on liquidity. If you're delivering from sell side and displacing higher through bearish imbalances, the draw on liquidity is buy side. If you're delivering from buy side and displacing lower through bullish imbalances, like this 12 hour, then the draw on liquidity is sell side. So that's how you determine the draw. And then as far as the entry model itself, wait for a rebalance into a key level. So this morning, what did I do? I waited for the rebalance into the 1 hour, which was also in equilibrium of this price leg. And then, so that's the higher time frame key level that should support your entry. And then for the entry model itself, you can use either change in the state or inversion for value gap. I like to combine them. And then just also learn to recognize these models, these textbook looking market maker models. I mean, every single trade, like 8 out of 10 trades I take look like this. And this is just a really good way to add conviction to your models because these models are so prominent, like they just play out all the time. And a market maker model contains every ICT concept, every smart money concept you've ever learned is inside of one of these. And I can explain that in like a later video. It's too much to go over right now, but these, like, you need to understand market maker models because they happen all the time. And it's like a market maker model is the market in its most efficient form. The most efficient delivery of the drawn liquidity that you will see is inside of a market maker model. But yeah, enough yapping. Like I said, clear bias today. Nice short, and I'll see y'all in the next one.